Good morning, ladies and gentlemen. Welcome to the Westminster Group PLC 2021 half-year results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted any time via the Q&A tab situated in the right-hand corner of your screen. Simply click Q&A, go to the bottom of the page, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Peter Fowler, CEO, Mark Hughes, CFO of Westminster Group PLC. Good morning.
Yes, thank you, Paul, and good morning, everyone. Thank you for joining us. As Paul said, I'm Peter Fowler, for those who don't know me, CEO of Westminster, and I'm joined today with Mark Hughes, our CFO, who's going to take you through all the numbers in a moment. But just to quickly go over the running order of what we're expecting to do today. So we'll briefly go over the highlights, and then Mark, as I say, will take you through the financial results. I will go over then an operational review, and in particular, I'll focus on some of the major contract awards, an update on those, which I know a number of our investors are keen to know more about, and then move on to our outlook and Q&As after that. So if we start with the highlights, Mark. So I think it's stating the obvious, isn't it, that COVID-19 is still having an impact, not just on us, but on most of the world. It has had an impact on our first half with travel restrictions and businesses being cautious about their spending. Notwithstanding that, I think we've actually delivered quite some significant step forwards in our business, and we'll go through these in more detail as we go forward. But operationally, we've secured 2 large-scale long-term managed services contracts. That's a tremendous step forward. We've secured a very prestigious contract, as you know, for the Tower of London, and I'll give more flavour to all of these later on in the slide. Our Palace of Westminster contract, I'm pleased to say, is now underway and is being very successful. Our Ghana port operations continue to perform well. Our West African airport operations, which most of you will know were quite heavily impacted with the shutdown of airports and so forth, that's now recovering ahead of our expectations, so we're quite encouraged there. We're developing new initiatives such as the COVID testing program. I can talk a bit more about that in a moment. I'm pleased to say our aviation training business was graded as outstanding in all areas by the Civil Aviation Authority. That's quite an accolade, and I'll tell you a bit why that's the case in a moment. And of course, hugely proud to say that we were awarded the Queen's Award, and again, I can give you some more detail on that in a moment. So, Mark, do you want to?
Yes, I'll take over for the financial side of this. First half, going back a year now to the first half of 2020, which was an unusual period. Our managed services projects were at record levels for the first quarter, and then lockdown came. But there was a rush to get fever detection equipment. It really came home to us what COVID was in the second half, when the managed services remained closed or at low levels, and the technology sales saw great uncertainty in the market. What the first half of this year does is show a recovery from the depths of COVID. Although we're not there yet, we're really on our way. Part of this recovery was increasing the managed services sales, which has helped drive the margin up from 40 to 45%. The group is effectively debt-free. We do have a little bit of lease debt because of our operating leases. It's accounted for under IFRS 16, but this is small. And finally, our cash balance at the 30th of June is in line with our expectations, and we're ready to deliver new projects that we signed going forward. Just moving on then to the financial results. Go through that slide. This slide, the income statement, is very much summarized what I was just talking about. Turnover was increasing as we start to recover. The gross margin is increasing both because the turnover's up and because of the mix, much more managed services product in it, of course. And I'm going to talk about the overheads on the later slide, so we'll come back to that. And the operating losses decreased by 24%. Before we talk about operational gearing as well, which is partly to do with that, let's have a look at the cash flow bridge. This shows that the cash at the end of 2020 started with about 2 million in the bank. And then we've had cost of sales and overheads, which are the next three big ones. And a small depreciation, which add back, which is an inflow. The next big blue one on the right is actually the a placing that was announced following the project services. The fixed assets have been small. We have been investing in working capital for the projects, and that's the 518 gold one there. There was a change in the lease debt, very small, and leaving us with 3 million at the end of June, which is what I said. It's in line with our expectations, and we are ready to deliver the new projects that we signed in June. Okay, I'm moving on to then a little bit more of a look at overheads. This cost slide does break it down a bit, and I'd like to sort of work upwards on it, if I may. If you look at depreciation, well, that hardly changes year on year. We haven't got a large amount of depreciation at the moment. The AIM and professional costs have gone up very slightly, partly inflationary, and partly to do with a little bit of activity that we've been doing. The other indirect staff and travel costs are very much inflationary. There's been very little going on there. The big change in our overheads is because we're investing in more sales and marketing staff to drive forward sales in future periods. Reason for this, our marketing opportunities are increasing. The market is quite buoyant. What we need to do is actually convert those opportunities. And to do that, we decided we need as large a sales force, which is what we've done. However, having said that, this is a slide I've shown on a previous occasion, and it shows how operationally geared we are. Every time we have a new operation, we don't need to add much to the central costs. In fact, this time we're going to be making a step change of 3 additional heads in operations and finance centrally to help with the new projects. However, once we've got those, we reckon we can do another 5 projects without taking on any further major central cost. And to reiterate what I said on the last slide, we've been taking on a modest cost to drive forward new sales, not to deliver the projects that we've won. Another way of looking at this is our headcount. And we're currently looking at 214 operating staff and 47 central. The operating staff by the end of the year is projected to go up by 200%. But centrally, we go up by 6% by these 3 people that I've talked about. And those staff are going to be relatively junior. And then we expect the central headcount to be relatively fixed for the next few projects. So just to summarize my section, we're seeing growth in sales and margin that will accelerate as the new projects are coming on stream. We're operationally geared, so the central cost will be relatively fixed, and we expect all of the new stuff to drop to the bottom line. So I'm going to pass back now to Peter to do the operational review.
Thank you, Mark. Okay, so we've got operational review, recovery, growth, and excellence. That's how we're seeing the year going forward. Clearly, we're still recovering in parts of our business from COVID, and we hope that continues, of course. We are seeing growth, and we are achieving excellence. So I think that's a really good 3-word strapline. Next slide, Mark. Okay, so just walking you through the operational review. as you all know, signed a 20-year managed services contract, 5 airports in the DRC, and a 10-year managed services contract for a port in West Africa. 2 really significant contract wins. It's a bit like buses. We'd been negotiating these for ages, and then we signed 2 within 2 days, which is somewhat uncanny. But 2 fantastic contracts. I'm going to talk a little bit about those in a moment. We also signed the prestigious contract for the Tower of London, and again, I'll talk about that in a moment. But terrific contract win for Westminster. We talk about our West African airport operations recovering. As I mentioned earlier on, it was hard hit during the COVID period last year. It has been recovering since the end of the year. We announced, I think, in our annual report that we were around 50% recovery. We're now at 70%. We're seeing a month-on-month increase, which is very encouraging, and we're expecting that to continue. Our Ghana operations, our port managed services operations in the port in Ghana, that, as I've previously reported, is performing well. It wasn't really affected by COVID. Container traffic was still flowing through. I think it shows the importance of that contract. When we first announced it, I said it was going to be an important contract, and it certainly has been for the business. And as we know, as many of our investors will know, there is a 4th berth coming on stream later this year, Q4. We hope it's going to be up and running, which will indicate that we're expecting to see further growth from that operation. Our guarding operations, again, it was an area of the business that was quite badly affected through COVID. Obviously, sites were closed down. A number of our contracts are in leisure facilities, and they were affected. But we are seeing recovery. We've seen some interesting new contracts, and we are winning new contracts. And I think we'll see some significant increases in revenues over the next 12 months. Training, again, for those who don't know, that we provide training, particularly aviation security training all over the world, and much of it driven by UK government. And that, of course, with travel restrictions, was again impacted through COVID. Still is to an extent, although one of the initiatives that I've reported in the past is a remote training, online training, which we entered into joint ventures with last year. That's proving very helpful. We've already won 3 or 4 new contracts in the last few weeks, which we're starting to deliver face-to-face training for the first time again. So that's recovering ahead of expectations. So it's another revenue stream that's bringing decent revenues to the business. Our COVID testing program is a new initiative that we've announced with Certific. That continues to grow. We do anticipate that COVID testing is going to be with us for some time, so I think that program's got some way to go yet. You may have noticed in the press that there was a festival, Standard Calling, with about 14,000 attendees who went through this testing program. And for those who are not aware, we're providing the verification services. So we're a bit like the X-ray screeners, if you like, in the background. The COVID testing's done on an app. You video that you've done the test, and we verify that it was done properly. So it gives confidence to event organizers, if you like, that the tests were done properly. So again, it's another initiative. It's another revenue stream. If you remember, one of the strengths of our business is all these different revenue streams that we have. And some of those have proved invaluable during COVID. And as many of you will know, we signed an MOU for a long-term airport security project, another managed services project in Burkina Faso, West Africa. I will point out that we don't normally announce MOUs. We've not done that for some years, and we don't want to discuss progress on these in public forums. That's not helpful to contract negotiations. There is an exception in this case because the government in Burkina Faso themselves announced that they'd entered into this MOU with Westminster, and so it was in the public domain, which is why we announced it. We have moved forward with it. Our team has been into country. We've undertaken the gap analysis works, and the reports have now been issued to the government. That will now form part of our contract negotiations, and we are hopeful of getting back into the country in the next few weeks to pursue that. So another opportunity that's bubbling away in the background. As we say many times, there's no certainty on outcome or timing. We're not making any particular forecasts here, of course, but it's an exciting new opportunity that we are pursuing. In terms of our technology division, our products and solutions have been impacted by COVID. As you've seen, travel restrictions do affect us, not just in terms of securing orders, but actually in delivering some of the the orders that we've actually achieved. But we're seeing recovery. We are seeing greater activity. We're seeing some confidence coming back with some of our potential clients who were very understandably cautious about spending. And we are expecting a busy H2. Interestingly, we have still secured orders for products and services from over 40 countries around the world. I think that does indicate what a global business we are. Our Palace of Westminster, that UK Parliament project is successfully underway. When we talk about, COVID delays, here's a classic example. That contract was supposed to be placed about March 2020. It eventually was placed on us in September 2020, almost a year ago, and we were only able to actually get into the site and start the operations around April, May time this year. So you can see how these things just shift some of our revenues. It doesn't mean they're lost. It just means that it's taken longer to get going. But actually, very successful implementation so far. So we're quite proud of that project. KSA. I know some of our shareholders are quite anxious to know what's happening with Saudi Arabia. We have formed Westminster Arabia. We've been waiting for our in-country manager to get back into country. He's currently in Japan, and there were travel restrictions that meant he can't go, couldn't go back to KSA, and we need him back into country to sign some of the licenses, banking licenses and various things that we need in place in order to pursue some of the projects that we've been lining up. We're hoping to get him back. We say late August on this slide. It's actually probably going to be early September now, because I want to bring him into the UK to be here for the Queen's Award ceremony. There's some interesting people I want him to meet before he goes back. So it's probably going to be the first week of September we get him back into countries. But we see momentum now moving forward in Q4. There are various large-scale project opportunities in the kingdom. The kingdom's 2030 vision certainly opens up opportunities, ports and airports. It's a privatization program that they're running. And there's also huge opportunities with organizations such as Saudi Aramco, who are one of the world's largest companies, as most of you will know. So it's not a 5-minute thing, but I think there's some really interesting and substantial business opportunities in KSA. We see it as a sorry, Mark, stay on the slide. We see it as being quite a major growth area for our business, and I see one of the questions somewhere was asking about potential revenues. We see it in the millions as we go forward. You can switch the slide now, Mark. Okay, so I know there's a lot of sort of discussion and concern is not the right word, but our shareholders want to know why, with a relatively poor first half, and I use the word carefully, how we're going to get to our future revenues. Now, there's a whole range of reasons why we have confidence in our future. Our product sales, we see as I just mentioned, we see our product sales increasing and the activity growing in the second half and going forward. Our Ghana port operations continues to grow. Our West African airport operations are recovering, as are our training and our guarding businesses, of course. The three red arrows clearly are very significant step forwards in revenue. We do have anticipated new managed services sales and new anticipated large-scale technology sales. Some of those can be in the millions. Now, of course, we're not out of the woods. It all depends on the recovery continuing and no setbacks and confidence recovering. And it's really too early to say, but our internal forecasts, our visibility of our business so far means we're still on track for this year. It means we're going to have a cracking second half if that happens. But more importantly, and this is really what we want to get across, is it's our future forecast, our 22 and beyond, that we have a great deal of confidence in. Really and truly, if some of this does slip into 22 and we miss the numbers, I'm not saying we're going to at the moment. We still think we can. We're on track to make our 21 numbers. But if it does slip, it's a slippage. It's not a loss, and it means that we have, whatever happens in 21. If the recovery is a bit slower, we still have utmost confidence now in our 22 numbers, and I think that's an exciting place for the business to be. Next slide, Mark. Okay, I mentioned recovery, growth, and excellence, and some of you may have seen this slide before, but I'm quite proud of it. In May 2020 and again in April 21, as I mentioned earlier, Westminster Aviation Training were graded as outstanding in all areas by the UK Civil Aviation Authority. That's a really very important endorsement of our business. I mentioned that the UK government use Westminster for training in airports and so forth overseas. To be recognised in this way is a tremendous accolade for our business. You could count on one hand and almost on one finger the number of companies that have been graded in this way. So we should all be proud of that. Equally, we should be proud of the fact that in November, the London Stock Exchange recognised Westminster as one of the 1,000 companies in Britain to inspire Britain. There's a lot of companies in Britain, so I think that was another accolade. But of course, the biggie is in April 21, being awarded the Queen's Award for Enterprise in recognition of an outstanding achievement in international trade. And no matter what your views of Westminster, you cannot take that away from us. That's a tremendous achievement, and I'll give you a bit more flavour on the Queen's Award in a moment. So next slide, Mark. So, okay, we're going to move on, and I know that our investors are keen for more information on these three important contracts that we've secured. We've put a slide up. These are our vertical markets that we're focused in, our marketing areas, land, sea and air. Each of these areas is huge in its own right, of course, and we only need to capture small market shares of each to have a very substantial business. And, I think we're on track to do that. And the reason I put that slide up is because the next 3 significant contracts that we've just won, I'm going to talk about, is actually one from each of those sectors. So first, next slide, Mark. Okay, so the first one is clearly land. It's the Tower of London, significant high-profile contract. I don't need to talk much about the Tower of London. I think there's not many people in the world that don't know what the Tower of London is. Royal Palace, Fortress, and of course the home of the crown jewels of it. Well, I've got England now. That's wrong, actually. It's the crown jewels of the United Kingdom, isn't it? But you can imagine the level of security that this building commands, and the fact that Westminster have been awarded a contract to protect parts of the castle, I think is again an accolade for our business. You can imagine contracts of this nature don't get placed easily, and there's a lot of hoops that need to be jumped through. So I think that's a tremendous contract win for us. It's going to have potential 7-figure revenue streams next year. So I think it's not just highly prestigious, but it's going to significantly add to our revenue streams. And of course, it's going to help us enormously in our business development elsewhere in the world. So we expect it to be a long-term deployment, and I think it's got some really interesting growth potential. If you think about it, we now have the Tower of London, we have the Palace of Westminster, we already look after the European Parliament, we look after the Scottish Parliament. So I think you can see a pattern that Westminster is really getting ensconced in an awful lot of important buildings now. Okay, next slide. So this one is RC, and it's a container port in West Africa. And before anybody asks me why we're calling it West Africa and not giving the name of the country, it's quite simply, and a number of our clients have the same concerns. They're very sensitive about being named in publications, press articles, and so on and so forth. They don't like being talked about, particularly given that it's a security issue we're talking about. So they were named in our initial RNS, so everybody knows who they are. But like our West African airport operation, we're going to be calling it West Africa Port Operation going forwards. It's simply a client sensitivity. But it is a port in West Africa. It's not as large as our Ghana operations, but nevertheless, it's important. The contract is a build, operate, transfer. So we will be procuring, installing the container scanner at the port, and we will be building an area for secondary searching. So any containers that pass through the port that we screen, that we feel need deeper inspection, we advise the customs people, and they will then ask us to move the container to a secondary area and undertake a physical search. So we're doing all of that. Means we have to employ a number of locals, of course, and we'll have 1 or 2 expats running the operation. We get paid, it's an interesting point, we get paid in US dollars, like all of these contracts, not in local currency. So we get paid in US dollars into a bank account of our choice. And we're paid on this contract on all containers passing through the port, whether they're screened or not. So it's a nice, safe and secure payment method. It will take us about 12 months to put the whole of the screening operation in place. The current position contract is signed, initial setup is underway, the team are being deployed. The local subsidiary company that we'll have for employing the locals is all in place now. Our advisors are appointed and so forth. So The project's moving on. We need an area of land allocated for the screening. Probably important to point out there, up to now, there's not been screening at the port the way we're going to be doing it. What this country have been doing in the past is pre-shipment screening. So they had to have screening in the port of departure, which obviously wasn't very effective. They've now moved to arrival screening like most ports, which is why we're now setting this operation up for them. So there's an area of land being gifted by the government, and we're in the design phase of the construction and everything else that needs to take forward. So worthwhile project. It's going to be generating revenues, in excess of $1 million in the first 12 months, and will grow. It's also significant that it's another port managed services project in another country. So the more of these we have on the map, the more credibility and the easier it is to win other projects. In terms of starting the revenues, we can do that once we're in a position of being able to start the secondary search. We don't have to wait for the screening equipment to be in country for that. So I know investors are quite anxious sometimes as to when we're starting these things, but you have to look at them in the terms of the size of the project, all of the infrastructure that has to be put in properly, and whether it takes a few weeks or a month or so, it really is immaterial in a 10 or 20 year contract. But no, we're very excited about it, and going back to what I was saying, this underpins our confidence for our revenues going forward. And next slide, Mark. Now, of course, this is the one I know that there's an awful lot of interesting. It's quite rightly so. It's an air sector, of course. It's the DRC 20-year contract for 5 airports in the DRC. Incidentally, there's 54 airports in the DRC. Some are quite small, but small airports grow over time. So there's huge opportunity. It's worth mentioning that the DRC is a huge landmass. It's equivalent to Western Europe. It's the largest country in sub-Saharan Africa, the second largest in the whole of Africa. It's the most populous francophone country in the world, and it's the 11th largest country in the world. And why is that important? Because it means air travel is important. To get around a vast country like this, air travel is, of course, a necessity. So the contract, again, build, operate, transfer. We put all the right technology, the right equipment, processes, procedures, training, maintenance, everything that wraps around having an international airport security operation run to international standards. And we will be taking over all of the locals. You saw in one of Mark's slides the big jump in personnel. That's going to be all of the local AVSEC people that we're taking over, the people that sit at the control desks and the scanners and everything else. We're providing all the training and everything else that's going on. We get paid again in US dollars based on a security fee on all embarking passengers' tickets. So it's a similar arrangement to what we have in our West Africa airport operation, much larger, of course, but similar arrangement. Because we're being paid in US dollars based on that ticket price, we collect the money either directly from the airlines or, more likely in this case, through the IATA system directly. So it's a very safe and secure payment structure. In terms of the current position, the contract's signed. It's not going to be unsigned. It's signed. The initial setup team is deployed to the country. Again, Mark's been in country. The subsidiary company has been formed. Advisors and logistics and everything else are being organised and put in place. I know there's from some of the questions we're getting, I know there's concern about, well, when is this going to start? Well, you have to understand these things. It's very difficult to put actual, be specific on timing. We don't expect it to be long. We're not waiting for it. The ratification process that we've referred to is merely a process that the government have to go through on large contracts, and it's there because it's to stop an airport authority chairman or signing a contract with his brother under the table type thing. It's just a check system that's in place. And let me remind you, this contract has the support of the Airport Authority, the Civil Aviation Authority, the Ministry of Transport, the Presidential Office. All of them are supporting the project. So it's not, and it's very, and incidentally, the British ambassador was party to the signing of the contract. In fact, her signature is actually on the contract as well. So this is not one that you can say was done under the table. It's just going to go through their process. Why is it taking a bit longer? Well, these things happen. I mean, I'll give you an example. They've changed some of the personnel at the airport. That delays things. They have COVID disruptions still, so some of the people are off, so that delays things. And in the last week or two, you may read in the press that they've just had a plane hit a cyclist on one of the airports. And what does that tell you? It tells you that they absolutely need us to put the fencing in and the right security around it. But, life is like that. It takes time sometimes. It's not a disaster in any means. We are continuing to deploy. Let's not underestimate, this is a fantastic contract that gives Westminster a massive step change in revenues as we go forward. You'll see there that we're talking about, even at traffic levels at 50% of normal levels, and they may be slightly higher now, but that's what we're working on. We expect to see revenues in excess of 6 million in the first 12 months of operations, and it could be a lot more. And of course, significant growth potential over 20 years. As Mark very clearly pointed out, we are operationally geared. So if we're making a profit at that level and the passenger numbers double, almost all of that extra 50% then drops through to the bottom line. So you can see how this very quickly makes changes in revenue and profitability. And this is what we've been building for a number of years. These things take a long time to come to fruition, but I think we're now in a very, very solid position. Notwithstanding whatever might happen this year, we're in a very solid position going forward. And of course, like I said about the West African port operation, this is another airport managed services project in another country. So we now have 4 of these large-scale managed services projects in different countries around the world, and I think we're going to have a few more over the next year or two. So I'm very excited about where we're going. Next slide, Mark. So in terms of our outlook, move forward. I think really underpinning everything I'm saying, of course we have to accept there's still global uncertainty. Delays may still impact the delivery of some of our projects. They may push things to the right. It's not just winning contracts, it's delivering them to get the revenue through. But at this moment in time, we still think we're on track. There are some very substantial projects that are on the cusp that, if they come in, more than help make our numbers. But what I can say to you is, regardless of what happens in 21, we are extremely confident in our 22 and future forecasts. So I think that's a great position to be in, quite frankly. Okay, next slide, Mark. As I've mentioned, the Queen's Award issued to us in April. We have the actual award ceremony taking place on Friday the 3rd of September. We would like our shareholders to come and join us. It looks like being a huge event. We're having an open day as well as the award ceremony, so we've got a significant number of manufacturers. So whether it's airborne drones or explosive detection or screening and scanning, and some very interesting developments on the COVID testing front that we've managed to get some exclusivity on, which we'll be demonstrating at the event. Really interesting technology and initiatives going on. So it's a big day. We're expecting to have a few hundred people here. We've already got ambassadors and high commissioners from over 20 countries now confirm they're attending. So it's a very high profile event for Westminster. Be delighted to have some of our investors and shareholders attending. Come and talk to us, come and have a look at the operations, come and meet some of the team. We may have to restrict numbers. As I say, we're expecting a large turnout, but there is a link on the screen there. If you follow that link, you can register your interest. And next slide, Mark. So
it's the boring bit.
Everybody reads that in detail, I know, but we always have to have them in the presentation. So thank you, everyone.
Fantastic. Peter, Mark, thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab on the right-hand side of your screen. And I'd also like to remind investors that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the team, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Peter, Mark, we've obviously received a number of questions, both pre-submitted and live today. Perhaps we could address several of these and really focus around a couple of the key areas of questioning from investors, being forecasts and ratification and rollout of DRC, I know which you've covered on slide 12 and 18, but if there's anything further you can add. And due to the number of investors on the call today, perhaps if we could address those questions and we can review any further individual questions post-presentation and publish responses where appropriate to do so. Before we go into those thematic areas, perhaps, Mark, I could address the first one we have here to you. In note 11 relating to the contingencies, it stated that loss of 885,000 would be incurred if the shares were sold at a price at the 30th of June. What is the minimum share price that needs to be achieved in order to avoid any loss?
Well, first of all, let's make it clear that this is not a cash loss. This is we have a debtor that was produced for those shares, and we would need about 26p to totally clear that debtor, but we're in no hurry to sell, and I believe that over time we will get up to that number, which is why we're keeping it as a contingency for the time being.
Fantastic, thank you, Mark.
Yeah, I just sort of picking up on that. Mark's absolutely right, but for investors, whatever we sell those shares at, and they're at our call. So, as Mark says, we're not in any hurry to do it. It makes sense for us to do it when we're going to make a lot more money from them. But whatever we sell those shares at, we get the cash for. So it's a positive thing for us just to sit there and claim when we need them.
Thank you indeed, Peter. The next one, I think, Peter, is for you. We did touch this briefly in the presentation, but has there been any progress on Burkina Faso?
Yes, as I mentioned in the presentation, we don't normally talk about MOUs, and I don't really want to sort of provide a running commentary over the next few months on the progress of it for obvious reasons. It's not helpful to negotiation to have things appearing in the public domain. But yes, we've made progress. The process is, once you've signed an MOU, then we put a team in country, we undertake a gap analysis of the airports. We produce quite a comprehensive report, very substantial reports about the airport, what needs doing, processes, and so forth. And that report then forms the basis of the contract negotiations that we then enter into. So we've done the report's been submitted, and we are now trying to prepare to get back into country. Not always straightforward with travel restrictions, but we're working on that to get back to starting the negotiations. I think what is important to take away from this also is, as I mentioned in the presentation, the government of Burkina Faso themselves publicised the fact that they'd entered into this this agreement with Westminster. So, I take that as a very positive indication that they're keen to proceed.
Fantastic, Peter. Thank you. And again, I think one for you, Peter, is can you expand on the border crossing opportunities, please?
Yeah, I think that question probably refers to sort of comments we made in the interim statement about new initiatives and around big data. And if I can give you some flavour on this, we're seeing increasing numbers of inquiries for large-scale border screening requirements. These are sort of very expensive, large-scale apparatus that scan vehicles and people and everything as they cross borders. And we've been pursuing an initiative really to differentiate ourselves from the competition and really take it away from being a product-focused opportunity to something different. So the first thing to bear in mind is these can be several million a piece. They can be 5, 10, 15 or more, depending on many border crossings. So the first thing to try and do is to say, okay, well, let's take it out of the capital budget of the client. Very often they don't have the capital budget when they start talking about these opportunities, and move it into a revenue budget. It's a bit like the DFS, if you like. You can have your SOFA over 5 years, but a bit more complex than that. But you understand what I'm saying? Spread the cost. That's one part. But secondly, and to take it away from the focus on an X-ray scanner of a vehicle or whatever, which other people and manufacturers and everything else can be in competition with us on, and turn it into something different. Now, if you think about a border crossing, there's all sorts of data with various technologies that we can capture, whether it's the license plate of the vehicle, the scan of what's in the vehicle, the facial recognition of the driver, passport details, driving license details, all sorts of information we can capture as people pass or vehicles pass a border. So that data is quite valuable. It's quite valuable to the government and various elements of the government. Traffic volumes, what type of vehicles, what time of day, all sorts of information. So by bringing it more to a data capture and security operation, we're removing the focus from the actual product. Now we already have quite a serious discussion going on with a country on this. Very early days, and I'm certainly not going to get into any commercial sensitivity opportunities. And I'm not saying this is something we're going to sign up next week. This is more of a medium-term operation, but I think if we can actually move forward with this, I think it really does open up some very significant business opportunities. Okay.
Fantastic. Thank you very much indeed, Peter. Okay, if we could just move on to some of the key areas that have come up repeatedly, I guess, from investors that we've had through, really just around the forecast and just a few examples of those questions. It was stated we're on track to deliver a strong performance for 2021. Are we confident of our future forecasts? Another example, the RNS stated we're on track to meet full year expectations. If that's the case, would you still expect 15.7 million this year? Given 3.5 million at H1, that would require 12.2 million in H2. That is some jump in income. How do you justify that? Oh, great. You've got the slide up there. Perhaps I could hand back to you then, Peter, and just run through that, just to give a little bit more detail for the investors. Thank you.
Okay. Shall I take that, Mark?
Yep. You take that one.
Okay. So, look, we all recognise, don't we, that, there is some uncertainty. There's global uncertainty. We're not sitting here saying, cast iron, it's in the bag, we're going to do this by the end of the year. What we are saying is that with our visibility on what we see coming and providing that the recovery continues and we're not knocked back and that confidence returns to to some of our customers to place the orders that we know are bubbling on the edge and all the rest of it, and recovery as we see it happening in our West African airport operation takes place, then we still feel we're on track to make the numbers by the end of the year. Now, yes, it's a big jump from H1. But H1 was still impacted. H2 may be still impacted, but nowhere near as much as it was on H1. And don't forget the momentum we're building with those areas in red, for instance, and the ones in gold. Importantly, there's some technology projects that could well come in that are very sizable indeed, in the millions, very profitable. That suddenly make big step changes on those numbers. So
I think that's an important point, in that in prior years we've always had one or two big multi-million technology projects. Those were hit back by COVID, but they're now very much on our radar, and we're hoping to see them come through in the second half.
Yeah. So we right up to the end of the year, it could be close, but we are on track, and when you issue RNSs, you don't just do them flippantly. You have to demonstrate to our nomads and our brokers, and there's lots of discussions that go on in the background to get comfort on what it is we're saying. So let me be clear: we believe we're on track. We can do it. It's not easy. It's a bit of a mountain, but we believe we can do it. But I'm not saying we are cast iron guaranteeing it. We obviously do our best. But what I am saying is, even if we don't, and I'm not saying we're not going to, but even if we don't this year, there is some slippage. We have another wave in the winter that knocks us back. Whatever, all these things that can knock you off track a little bit. Even if that happens, we are extremely confident on our 22 numbers. And I think for shareholders, that ought to be a huge piece of comfort. And why are we confident? Because those red areas are definite. Those red areas will be producing significant revenue next year. The existing business will have recovered and will have grown. And, I told you about, the guarding business is going to make some step changes in revenues. And I'm pretty confident that by next year, something out of those gold arrows will have made a significant difference too. So we're very confident of our 22 numbers.
Yeah, and you shouldn't underestimate those red areas. They are step changes to this business. They are moving us forward dramatically.
Yeah.
Thank you very much indeed. And then just touching on the second sort of major area from investors, the ratification, the rollout of the DRC contract. A couple of examples of questions we've had through: is there a chance the DRC ratification will not come before the 90-day transition window is up? In the AGM presentation, you mentioned the airport contract ratification was only a matter of weeks. 2 months have passed. Can you explain the delay, and how will this affect our anticipated rollout in September, which is only a couple of weeks away?
Okay, and I think it's fair, and I get why a number of investors, have asked similar questions. I understand that, but equally, I hope most people understand that, as I've said many times, you can't be specific on timing. I gave you an example that they've had an aircraft hit a cyclist on a runway in the last 2 or 3 weeks. That distracts them. That becomes a major incident. That takes people's eyes off the ball. And, these things, I can't control these things. I'm not making it up, by the way. Go and research it. You'll find it's true. Let me sort of put it this way again. This contract's been signed. It's not going to be unsigned. It's signed. There's a process in place. We're not waiting for the ratification before we start the mobilization and so forth. We've started that. We won't get revenues flowing until the ratification's done, because we need the ratification, then we need the IATA system and everything put in place. But it's a 20-year contract. It's a 20-year contract that's going to produce significant revenues for this company and profits for years, huge growth potential. So if it's if it takes another month, who knows? It might happen next week. But if it takes another month, does it really matter? I know it matters for the year end. I understand that. But park that as a thought process. You know, we're focusing on the wrong thing. This is a huge contract that's going to deliver substantial revenues, definitely next year, and hopefully, a good chunk this year. But I've never said these things are going to, cast iron. I've always keep saying that there's, you have to take everything with a bit of pinch of salt, really. You don't know whether it's going to be this week, next week, but it's happening. And furthermore, let me, if you research, you'll see that the government again in DRC publicised, the presidential office publicised that they'd signed this agreement. There was 2 major investment programs that the president was very keen on. We are one of them, and it was in the press. Now, these things don't happen if the project's not going forward. It is going forward. It just is, I'm not going to give you a time scale because, everybody will hold me to it then. But it's going to happen. It's going to happen fairly soon, and we'll be off and running, and everybody will be very happy.
Peter, thank you very much. Peter, Mark, as we're just coming up towards the hour, thank you for addressing those questions from investors. And of course, the company will review all questions submitted today and we'll publish responses where appropriate to do so. Just on that basis, Peter, perhaps if I can just ask you for a few final words just to wrap up before we redirect your investors to give you some feedback.
Okay, well, first of all, I'd thank everybody for coming on the call and staying with it. I hope we've given you a flavour of what's going on. Of course, there's things that, we're unable to talk about because we can't talk about them in the public arena, but we're very excited about our future. I think we've been honest with you. I think you can see where we're going with this business. I think it's an exciting time for us and our shareholders, and thank you for the support.
Fantastic. Peter, Mark, thanks for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Westminster Group PLC, we'd like to thank you for attending today's presentation. That concludes today's session.
Thank you, everybody. Bye-bye.
Thank you.